I'm not leaving. I'm not leaving. I'm not leaving. The show goes on.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks closed mixed on Tuesday as a key consumer inflation report showed inflation accelerated in June, big banks kicked off earnings season, and Nvidia looked set to receive a green light for trade with China from the Trump administration. However, despite all of the good news we got today, stocks were broadly red, except for a couple of mega caps, obviously semiconductors, Nvidia, AMD, AVGO. They were very, very green. TSMC was green as well. Semiconductor equipment manufacturers also catching the bullish semi wave, but then software broadly red. Very, very interesting. A couple of the other mega caps were also red. Software infrastructure was very green, from Microsoft to Oracle, the Palo Alto, the cybersecurity names. Apple was up ever so slightly, along with Amazon and Google. Other than that, and a couple of green names, mostly as it pertains to earnings. For example, Citigroup up 3.6%. It was actually a very, very red day across the board. In fact, only one single sector gain today, and that was the XLK on the back of the semi names. That was it. The S&P 500 was down 0.43%. Gold was down 0.42%, and every other sector fell, despite kicking the day off, which was actually fairly green. If we actually look at small caps, mid caps, value, core, and growth, value and core really took it on the chin, specifically value. Look at small cap value, mid cap value, large cap value, deep in the red, core as well. So today, under the hood, a very, very ugly day, all things considered. In fact, the only thing that held the market together today was large cap growth, and that was up only 0.13 of a percentage point. Everything else was red, and it really started off with this inflation report. You can see here that inflation did accelerate. If you look at the inflation rate year over year, the previous number came in at 2.4%. We got 2.7%. Now that is in line with the consensus. However, the trading economic forecast forecasted 2.6%. So it did come in a little bit hotter than expected. However, compared to the consensus, it actually came in line with what we were expecting. And that's because the month-over-month inflation rate came in at 0.3%. Core came in at 2.9% versus the 3% consensus. So it did come in a little bit cooler. And that's because we printed a 0.2% month-over-month figure versus the consensus of 0.3. So core came in a little bit cooler than expected. That's positive. But still, when you look at the, month-over-month readings from 2.8 to 2.9, 2.4 to 2.7, inflation did re-accelerate. If we look at the Redbook Index, it did come in at 5.2%. This is just a weekly aggregate of retail sales. And then Empire State Manufacturing came in at 5.5, beating the consensus of -9. So all in all, the economic data was actually positive. We beat the consensus estimates. However, inflation did re-accelerate. But I think that is why stocks were kind of bullish to kick the day off. I think the reason why we saw a lot of the red that we did in today's trade had to do with this crypto bill. Now, House conservatives tanked a procedural floor vote on Tuesday afternoon to advance a trio of cryptocurrency bills and the fiscal 2026 defense spending measure, throwing the fate of multiple Republican legislative priorities into limbo. GOP hardliners said they wanted that legislation to be packaged with the other two crypto bills on tap for consideration this week, a market structure bill and a bill that would ban a central bank digital currency. 13 Republicans voted no. Donald Trump was very, and I think when it came to risk sentiment, this is kind of what tanked a lot of the euphoria. You could see, like, when we got this vote when this vote got going and you look at the markets, ultimately these two coincide. So I do think that this procedural vote not passing really did do a number on sentiment. But all in all, there was a lot of positive catalysts, a lot of, I guess you could call it, sell the news events. Nvidia was very, very bullish, and it looked like at the start of the day, pre-market, we were going to have a very green day because Nvidia came out and said it will resume its H20 AI chip sales to China soon, following US government assurances. And this is why chip stocks were surging. And it's pretty simple why. If Nvidia can get back the China market, which Wall Street had effectively written off any China-related revenue for Nvidia, AMD, ABGO, and all of the semicons. With Nvidia regaining access to the Chinese market, any revenue from China is pure upside, and the street's estimates are now looking at anywhere from $15 to $20 billion, or roughly a 10 to 12% boost to financial year 2026 earnings. That is tangible, and obviously it scales with Nvidia, AMD, ABGO, the semicon names, and everything in between. So long story short, this is very, very positive for the earnings picture of Nvidia, and this probably is the reason we go to $200 per share. Nvidia currently at about $170 per share. There was also positive trade momentum. An EU spokesperson came out and said they have no intention to retaliate before August 1st. This likely means a deal is underway, and a deal with Indonesia is finally done. The deal is as follows. Indonesia will be buying $15 billion of US energy or US oil, $4.5 billion of American agricultural products, 50 Boeing jets, many of them going to be 777s. And Trump also announced 19% tariffs on Indonesia, while the US will pay 0%. This is not a horrible deal considering that the US does about $38 billion worth of trade with Indonesia. This is actually a really, really good deal for America. And if Trump is able to get many more of these deals through, this is going to be a really, really good outcome for America in the long run. Now, looking at some market movers, JP Morgan came out, reported their earnings. You had a number of big banks, and quite frankly, JP Morgan beat out the top line, beat on the bottom line, beat consensus expectations, but I think the market wanted a little bit more. That is why we were down 0.94%. But I'm going to be honest, this report from JP Morgan painted actually a really strong picture of the US consumer. Card spending was up 7% year over year in line with Q1. Charge-offs at 3.4%, close to 2019 levels, and importantly, down versus Q1 of this year. Delinquencies were at the lowest rate going back to 2022, breaking the pattern of the upturn. Again, this report just shows a steady consumer, solid spending, no great appetite for borrowing just yet. Yields have to come down, but ultimately no real sign of any type of stress. And guys, we're going to talk about JP Morgan and their earnings in my second channel, FinFluential Media. So go ahead, like and subscribe. The JP Morgan update is going to be on that channel within a couple of hours after the upload of this video. Another market mover today was CoreWeave, up 6% along with all of the semiconductors. Now, it wasn't because of the Nvidia news. It was because CoreWeave announced it will invest up to $6 billion in a Pennsylvania data center. CoreWeave is looking to build a 100 megawatt cluster, expandable to 300 megawatt to power AI growth. This is on the back of Trump hailing a $92 billion in investments in AI and energy infrastructure in Pennsylvania during his visit to the state. Google is also going to invest $25 billion, and a whole range of other companies are going to be investing a ton of money in Pennsylvania to build AI compute capacity. And then for everything we saw today here, guys, there were only 1,500 advances, 4,700 decliners. We saw net inflows in the NASDAQ 100 and the New York Stock Exchange, however, declining from their highs at the start of the day, with the S&P 500 only down 0.4%. And guys, things not looking too great. The 5-day moving average, we actually lost that and it continues to deteriorate. We also lost the 200-day moving average. However, the 20 to the 150-day continue to remain sound. Now, guys, looking at the charts, guys, very, very ominous signs, some very, very bifurcated market. Let's actually quickly talk about it. Guys, look at this, right? The NASDAQ 100 up 0.13%. The RSP, the average stock of the S&P 500, down 1.3%. The S&P 500 did fall 0.4%, but the average stock fell a lot. The average high beta stock, the IWM, fell significantly more. Look at the S&P 600 profitable small caps, 2.1%. The S&P 500 and the NASDAQ 100 actually up. So what we're seeing is that mega caps are masking a lot of underlying weakness we see in this market right now. I mean, if we just zoom in right here, this is the S&P 500. Look at this daily candle. That's a bearish engulfing candle. We gapped up. Things were looking very, very bullish, couldn't hold, and then bears took us all the way down to these lows right here, and pretty much to the lows of what we saw this last week, right? I mean, if we don't hold this level right here in the S&P 500, call it the 6230 level, right? We're going to start opening some of these lower levels right here, the 6192, and that generally tends to happen. Now, we're still in July, and I still am in favor of bullish momentum from seasonally speaking, but we are going into August, we are going into September, and historically speaking, months of the year tend to be a little bit seasonally weak, and that could see a lot of these indices churn, which would be a good thing, have a little bit of a pullback, digest this big move we've made, and then go from there. But ultimately, I think this is a buying opportunity because we are going to see a reacceleration in both earnings and margins in 2026. So any weakness we do get, guys, we do want to be buyers of that. But I'm just saying, possibly be prepared for weakness. And we're starting to see that in the overall breadth momentum of the market, the S&P 500, the NASDAQ 100 versus the average stock. That is starting to play a really, really big role in what we're seeing. However, I will keep you updated. And in the year and now, we are still fairly bullish for the month of July. This is, seasonally speaking, this is a bullish month. So once we get through July, then we'll talk about what comes next. But just be prepared for a little bit of weakness that we could be seeing. And this could be the start of it with this candle right here. Now, if we actually just go to the futures, right, we could see that the futures are all right. So they're somewhat holding the losses or gains, I guess, in the NASDAQ 100. You could see futures are kind of flat here on today's trade. Europe stocks were only down 0.3%. Middle Eastern stocks down 0.4%. China stocks up in a very big way. And again, that has to do with that Nvidia move. And guys, growth versus value right here. SPG, SPYG, and SPYV really goes to show what happened. Value down 1%, growth flat. Massive outperformance from growth. So really, really telling you that this market is very bifurcated. There's two ends. There's the mega caps and then there's the rest of the market. And the mega caps are completely outperforming. Now, part of the reason why we saw massive weakness here today in the S&P 500 has to do with yields. Yields ticked up in a very big way. But more importantly, the dollar is up 0.5 percentage point, right? And again, we've spoken about this for the last couple of weeks. The reason why we're going to see strength in the dollar and maybe some weakness in some of these risk assets, a little bit of weakness in risk assets has to actually do with the fact that the TGA is being refilled. That's a liquidity drain, and that should persist, sort of into mid-September, potentially as far as early October. And then Bitcoin, our risk parameter for this week, sort of made a high at 120,000 to kick the week off, and now down 2% today, but still, at 117K. Bitcoin tends to be very volatile. Ethereum was actually up 2% today. Very interesting. Gold and silver largely flat, and then WTI was flat as well. And then the S&P 500, guys, you spoke about this as well. Now, I did say at the start of this week, I posted this before the open on Monday, the S&P 500 versus global M2 mining supply. Expect some minor downside this week before we continue the upside momentum with a higher low. Now, if we go ahead and put in a lower low, the upside momentum won't continue. So everything for us to continue higher is dependent on the higher low, right? And then going back to our charts, that higher low right now is probably this level right here, the 62.24. So if we see another day of pretty violent downside in the S&P 500 that gets to the 6,200 level and we start to have price action below it, that would mean a lower low that could signal some downside. However, if we probably hold, I would say, the 62.20 area right there, that probably means we do go higher, especially looking at M2 money supply. That does mean the expectation there is for us to move higher, especially in equities. But just remember, it is not a one-to-one correlation like it is with Bitcoin. Looking at M2 money supply is really, really good for Bitcoin, not so good for the S&P 500. Bitcoin diverges about 15 to 20% of the time. S&P 500 diverges about 40% of the time. So, that 40% number is very significant. We also did note that looking at our core wall right here, that we did see resistance forming, and it acted as resistance in a very big way. And ultimately, if we are to pull back, if we are to break below this, make a lower low, our ultimate downside target would be the 60.96 level, or we can just call it 6,100 flat. That would be the place where you would start to nibble, add exposure. And on a peak to trough, if we were to take a measured move, we're looking at about 2% downside to get to that level. But it really depends if we put in a higher low. We got the economic data we wanted, inline inflation. It really all depends how the market views the rest of the developments, everything from trade deals to what we saw with the crypto summit to what we saw with Nvidia. The market is going to digest all of that news, and then we'll go from there. That being said, on the actual day, if we look at the one-day trade, we were very, very bullish coming into the day. If we actually just go to a percentage return, right? At one point, the S&P 500 was up 0.5 percentage point, and then we finished down. So a huge swing right there really goes to show the volatility we saw in today's trade. And that's what we saw. The VIX was up slightly, nothing crazy. Front month and spot VIX were up in a very, very big way. But looking at some of our other parameters, guys, looking at the dollar, I think the dollar is going to continue to strengthen. I think it's part of the reason why we actually did see a little bit of weakness. Strength in the weaker dollar is, generally better for risk assets and specifically earnings. And so we are seeing a bit of strength in the dollar. And that comes at the behest of maybe just a little bit of weakening risk assets. We also did see that the 10-year yield, 2-year yield, 30-year yield, is broke above this trend line right here and, is exhibiting some bullish momentum. And if you look at this low relative to this low right here, so, this low relative to this low, what we are seeing is a higher low and broken above this downtrend right here. But given everything we know now, we probably would need to adjust the trend line to that level. So marking this peak and this peak. And then, as long as we probably hold, I would say this level right here, let's actually just put this on regular. As long as we hold, I would say this 4.5% level here in the 10-year yield, that would be positive, and we would then continue the trend to the downside, but then we would need to make a lower low below the 4.2% level. But this has been a very, very strong move in yields, and that has come on the back of just stronger economic data and trade deals coming to front of mind for the markets. Yields actually soaring means the economy is in good shape. Normally, when yields actually fall, that's a sign that the economy is not particularly in good shape. Now, guys, looking at Bitcoin, let's quickly have a look at where we are with relation to M2 money supply. So we've had a strong rally off the lows, as you can see right here, off these lows and off these lows. And ultimately, even though the path of least resistance is higher, do expect us to consolidate in this period right here. You can see that we normally just trade a little bit sideways in this area before making the next move to the upside. And also with the TGA being refilled, we can see that M2 money supply is actually seeing a little bit of downward momentum. And I do think this is probably going to continue. And I think we're probably going to see a chart that looks something like this over the next couple of months. And then we'll put in a bottom and then go from there. But ultimately, I think we're going to see the M2 money supply chart look something like this. I think we're going to see continued downward momentum in global M2, and that will weigh on Bitcoin, but the path of least resistance continues to be higher. Now, guys, let's quickly look at some stocks that I really do like, stocks that you want to be buyers of dips looking for at the end of the year into 2026. And one of them is this company right here, Lemonade. I really, really like this company. I think anything below, $40 is really, really good. My fair value for the stock is close to $55. So you're getting a deep discount to the name right here. There's strong support. So I think, selling in the money puts at 38, maybe 37, maybe $36. If you get assigned, that's all good. If not, you get to keep the premium. This is probably where you want to be for Lemonade. I really, really like this business. Another name I do like is Evolution, EBBTY. Now, they report their earnings tomorrow on Thursday, and you can see we've had a big move coming off the lows right here. And ultimately, what the market is waiting for is earnings. That's going to take us higher or lower. So for this name, if you don't want to play the earnings, right, what you can do is very, very simple. Wait for the earnings, see which way the market moves, and then ultimately look at key support levels if we do fall, to be buyers of dips at these key support levels, because long term, I like the stock. If we go ahead, break above, let's say we like a rip above, right, we then look for a pullback maybe to this level, and then we can go from there to close that gap. So ultimately, if you don't want to get in before the earnings, you don't want exposure before the earnings, you could probably just play the earnings afterwards. And then another stock I do like is NBIS. Goldman Sachs put a $68 target on this name. The stock was actually up, I believe, 3% today. Yes, it was completely outperforming the market. But back at the $55 area, this is a strong area of resistance. So I am expecting a little bit of weakness. Maybe we have price discovery back down to this $48 level, but I think anything below 50, great buy for NBIS. And guys, diving into sentiment, stock market sentiment is shifting back into extreme greed territory, signaling heightened investor confidence and potentially overbought conditions. However, this does suggest a strong bullish trend, but it does warrant caution for possible pullbacks. But I do believe those pullbacks will be short and sweet. Guys, extreme greed isn't a reason to get bearish at all. It's really a sign of market momentum. And when we look at the fundamentals, what's also driving momentum is earnings. Now, you could clearly see here that from about February into April, this was the tariff dip. Earnings revisions, right? Consensus earnings estimates actually went down significantly from about $565 billion to about $535. So this is about a 2% decrease in the overall earnings, right? However, you can see here that from the Liberation Day lows to where we are right now, earnings have remained largely flat. And this is telling us that bottom-up consensus probably have upside as we go into Q2 earnings season. And this is largely positive. If this was to continue to move lower, then we would see more downside in the market. And this is part of the reason why we've seen such a resilient market. Another reason is because of margins. Quarterly net profit margins are very close to all-time highs, matching what we did last year and at some of the highs we saw in 2021 during the everything bubble. This is solid. And when you have growing earnings or earnings that aren't being revised to the downside and margins at near all-time highs, stocks do very well in that environment. And let's actually talk about the macro, because the macro is conducive for the market to go higher. The Fed's Q2 GDP now sitting at 2.5%, very solid stuff. But more importantly, when you look at the labor market is ramping up, guys, into the middle of July. When we look at federal employment tax receipts, right, which is a great parameter for employee compensation and employee disposable income, a great parameter for the consumer, we're looking at July receipts so far of 10%. Double digits, very, very solid stuff. If you think the consumer is slowing down, it is not. Now, I do think we're going to see a moderation from these highs, but if we finish at 8%, that's also incredible. If we finish at 7%, that's incredible. If we finish at 6%, that's incredible. And I think we're going to finish close to the 10 mark than we are to the 5 mark. So very, very solid stuff. The consumer continues to hang in there. And then looking at data for the rest of the week, guys, inflation is behind us. Tomorrow we get the PPI, some more inflation data, and then we get retail sales thereafter. We're looking for 0.3 in the PPI number, but it's less so important now that we actually have the CPI headline and core figures. In terms of data, tomorrow on Wednesday, we have ASML, Johnson & Johnson. Those are going to be two big names. We also have Goldman Sachs, Bank of America, Morgan Stanley, and Progressive Insurance. That's all before the open. Then United Airlines and Discover Financial Services after the close. But guys, if you made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.